Good morning. This is Connor from 0DTE Traders here to present the week ahead for October 27th, 2025. In this video, we'll cover SPX gamma exposure, the VIX, and key events coming up this week. Let's dive in. To start the week, GEX, which measures dealer gamma exposure, is positive, 690 million notional, trading above our main transitional level of 67.45. This is what's referred to as the volatility flip. Above, all strikes are positive, that is supportive for the market price. Below, all strikes are negative, that is destabilizing for the market price. The call wall, which is defined by the strike with the highest notional positive gamma, is regarded as our upside target, our upper bound. Last week, that was 6,800. This week, shift higher by 200 points to 7,000. Now, 7,000 is a stretch this week. We do view 7,000 as a year-end target, but what is more appropriate this week is likely 6,900 as max upside. Now, keep in mind here, the variance between really three strikes, 7,000, 6,900, and 6,850 is very minimal. So that call wall could very well shift lower to 6,900, maybe even 6,850, but is not going to shift higher. There's just no positive gamma overhead. 6,800 is also an important strike here. Futures are up about 0.9%, implying that SPX is going to open with a gap to the upside. So this would be potential support on the downside, followed by 67.45, 67.50. Now that 67.50 level was the upper bound for much of October. We failed to break through it earlier in the month. We had the quick flush down as trade tensions escalated, but this was really a one-day event. Since then, we have been putting in a series of higher lows. 2 days later, a marginal higher low, higher low, higher low. That is a bullish uptrend. And then we broke out above 67.50 on Friday in response to a softer CPI. Now, what was once resistance becomes support, so there's always potential to backtest this at some point. Could be this week, could be some point in the future. But if this holds, that is a bullish indication, and you would look for a move back to the high, and then a break of that high, wherever it may be, is a continuation signal. A false break, however, will pull us back into that trading range with 6,700 as major support. Now, in regards to those targets, it's very similar to here, right? You're buying a dip. Your first target is always back up to that high, and then it's a break of that high that implies the continuation of the trend. Okay, so that's kind of what I'm illustrating here if we do get a back test, right? How the market responds to this level is going to be critical. Also, take note of this gap on the downside, 67.79 to 67.38. This is Friday's gap. So this is a low liquidity area, potential for price to move with high velocity in that range. Additionally, with futures up 0.9%, there's going to be another gap here on the downside today. Transitioning over to the VIX peaked 2 Fridays ago and contracted hard last week, which is a supportive variable for the upside. But the VIX is now at the lower bound of 1615. You can see this from a price action perspective with 14.15 marking the low of year. If we look at the VIX open interest, 1516 has the highest concentration of puts. So anything below 15 would be considered oversold from an options positioning perspective. So what we're highlighting here is really where the risk lies. So further volatility compression will support upside in the SPX, but is unlikely to lead to any sort of squeeze conditions, right? Maybe you get a bit of a squeeze in the morning, but that squeeze tends to fizzle out quite early when vol's at this level and generally transitions to more of a positive drift. Conversely, being at the lower bound, the risk is skewed to the left tail. If you do get a rebound in volatility, it will exacerbate the downside. Now, the challenging thing with volatility is it's very challenging to pick the troughs, right? Vol can stay at the lower bound for an extended period of time, while the SPX just drifts higher. Whereas it's much easier to pick peaks in the VIX and troughs in the SPX because vol is naturally mean reverting, right? Take, for example, utilizing the VIX to determine the one-day implied move. So you can do a simple calculation here. You take the VIX reading, divide by 16, and this will give you what the VIX is implying on a one-day basis. So take, for example, 30. VIX 30 divided by 16, that's a 1.9% implied move. For the VIX to sustain a 30 level, you need to continuously see 1.9% volatility or elevated volatility, right? This may not always be realized in the market. But the point is here, that level of volatility is not normal. So it tends to be short-lived. Vol reverts to the mean, which creates a squeeze rally on the upside, which is what we saw more or less over the past week and a half. On the data front, Wall Street is preparing for a packed week with attention on third quarter earnings season and the Federal Reserve's second to last policy meeting of the year. This takes place on Wednesday. The US government remains shut down, which continues to limit economic data releases. But the long delayed September consumer inflation report, CPI, came out last Friday, softer than expected, giving the central bank more flexibility to cut rates. According to the CME FedWatch tool, there is a 96.7% probability of a 25 basis point rate cut at the Wednesday meeting, and a 91% probability of another 25 basis point rate cut in December. Additionally, markets expect the Fed to end or at least further hint at ending its balance sheet runoff at the Wednesday meeting. If this is not delivered, it may disappoint markets and lead to some selling pressure. So, kind of keywords to look for in that Powell presser. On the earnings calendar, Magnificent Seven are set to take center stage. This is probably the most important earnings week. So we got Microsoft, Google, and Meta scheduled on Wednesday, and Apple and Amazon on Thursday. Market participants will also be watching U.S. President Donald Trump's trip to Asia, where he is scheduled to meet President Xi on October 30th. Any headlines before or after the meeting could move markets sharply, as recent events have shown. So I would just keep your newsfeed up, remain vigilant. I'm sure we're going to get some comments from Trump this week.
If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.